Interesting budget this year. Came and went as usual. It does quite quickly. Of course, last year we had definitively a housing market budget. We had policies that were introduced to address what was perceived to be imbalances in our housing markets from what was a sharp decline in rates over the previous few years. Of course, there were issues about first home buyers, housing affordability, and but this year, of course, that seems to have passed through the policymakers, and really nothing at all specifically to address what remains to be or remains imbalances in the housing market. But I think the interesting take-off for the housing market is probably more profound this year than it was last year. There's no doubt that the government is well pleased with a surge in tax receipts. Jobs growth has been very strong over the past year. But when we look more closely at what's generated jobs growth over the past year, it certainly is migration. Migration is trending at near record levels, and of course that's created extra jobs and that's created extra tax receipts, and the government has decided, perhaps not surprisingly, to return some of those tax receipts back to taxpayers in a targeted manner. Of course, the return of or the decrease in taxation is going to be paid as a lump sum bonus at the end of the financial year, so it's not an ongoing week-by-week proposition to feed into the economy. I don't believe it'll have a significant impact on economic growth. It's quite marginal in terms of its volume, those tax cuts, and coming at the end of the financial year, they'll likely just pass through the system. We've got to remember that latest data out yesterday from the ABS shows that retail sales were flat over February, so no growth in retail sales, and that's no surprise given we have near record low incomes growth. And this is a conundrum not just in Australia but worldwide or in advanced economies where we have good numbers for the labour market, low unemployment and jobs growth, and yet incomes growth is just not happening. So really, given the lack of potential for productivity growth and also for cost savings through the public service, the only real growth in our economy as predicted by the government in the budget, even though they are modest predictions of growth, can only come from where it came from last year, and that's through migration. And of course, increased migration is a positive driver for housing markets. There's no doubt that the strength of the Sydney and Melbourne housing markets has been a factor, or has been driven by what are record levels of net migration into both New South Wales and Victoria over the past year. With continued undersupply of housing, that means that there's always upward pressure on prices and particularly rents. Those markets remain chronically undersupplied, and given the continued prospect of near record or record levels of migration to support the economy, we will continue to see that undersupply. There were no real initiatives in the budget on the supply side. The government has announced that no longer land developers will be able to claim their tax deductions on a yearly basis. That will likely be passed on, the $50 million savings to the government will likely be passed on by those land developers and land bankers to higher costs for land, which still remains in short supply, particularly in Melbourne and Sydney. And you know, we're talking about broadacre development here, and a lot of the new supply is required in inner suburban locations in medium and high-rise development, and really no initiatives there. So look, the prospects are for more demand in housing markets, with a still constrained supply that will mean upward pressure on prices and rents. There's really no prospect going forward of a surge in incomes driven by what is theoretically more competition for labour as labour markets are factored in with lower unemployment and more jobs growth. So in all, the remarkable outcome for this budget this year is more positive, with no housing market specific policies, than it was last year when we had a raft of policies directed specifically to the housing market. I think that, again, a missed opportunity in terms of looking at the supply side of the equation from the government. Of course, the federal government is constrained. Land supply is the jurisdiction of state governments and local governments. That doesn't mean that we can't have initiatives to set aside Commonwealth land for development, particularly inner suburban, middle suburban Commonwealth land, and also to develop a compact between governments at all levels, federal, state and local, to increase the supply of land, particularly in areas where people want to live. But the government certainly, through this year's budget, has failed to do that. But it certainly hasn't failed to continue to fuel what will be rising demand for housing in capital cities, which mostly just don't have enough houses to meet that demand.